Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for the evening, and we're here now on the 16th of May, Tuesday, 2023. Okay, so we saw the debt ceiling meeting. It lasted about an hour, they say. Everybody came out, all smiles. Everybody was cordial, unlike, if you remember Pelosi and Trump, that wasn't cordial when they met. This one was cordial. Mr. McCarthy's comments, I think we can get this done by the weekend. That's called nonsense, all right? I don't even know why he made the statement. First off, the president's leaving, which I don't think he should do, to the G7 meeting. I mean, I'm on the side that you have your domestic issues before you have world issues. And this needs resolving and be presidential here. Don't say, I can do this by phone. You can't do it by phone. You can barely do it when you're here. How are you going to do it by phone? The other issue that we have going on is what was said. I like that. It appears that very nicely they're going to shoo out of the negotiation for the time being. That's my impression. McConnell and Schumer, get them out of here. The president's staff will deal, and he's put new people onto the staff, 2 new ones. I write about it tonight who they are. Meeting with the Mr. McCarthy's staff, and they will negotiate down where they can get to. When they get to the point where they want to bring everybody back in, they can do such. This is not the time. Too many cooks in the kitchen. And that's smart, and that is presidential, and I give Biden credit for doing that one. There's still a lot of big open issues. First off, how do you cap the spending? I think they've reached agreement on taking back the money, which is somewhere between $57 billion and $65 billion of unspent COVID money. So that, I don't think there's going to be a fight over that. I think they're going to agree within the bigger scope of things to that. There's going to be Medicaid issues. There's going to be work issues. That for sure is not resolved. Then the length of deal that they get. That's nowhere near resolved. Democrats want it as short as possible, figuring they can get to the point where they can eventually win the presidency again and get through everything, get rid of the debt ceiling. And especially if they can trounce the Republicans. Republicans, oh, no, they want a 10-year deal. They don't know where they're going to be with the next election. You know, it's going to be the election of the 2 most unpopular people you can imagine in terms of the polls, Biden and Trump. You can't argue that the polls speak for themselves. But I don't see anybody that's strong enough yet to dethrone Trump getting the bid. We'll see. It's very early. That can change lickety-split. You know that, and I know that. But it does appear that his latest court loss didn't really take his detractors anywhere. Okay, so that's what I think. Now, I'm watching the futures tonight. We were down, for example, 350 points in the Dow. You're up 40 points tonight after that meeting. You think that's saying things went phenomenal? I don't think so. Maybe it'll get traction as the night goes on, but I didn't see it. Gold's got plenty of problems because it's got not only the debt ceiling issues, and they're serious, and they're causing interest rates to go up. You know, people think that you wait for June 1st and that's the problem. It's not what's going on. Interest rate yields are climbing every day. People are saying, why do I want to own American debt if I can't be paid on it right away? And that's a problem. So you got to keep raising the rate ratchet higher to entice them to buy it. Not good. And Janet Yellen has properly brought that up and said the impacts are being felt now by American companies everywhere, and it is hurting. We saw that Home Depot in the retail sales, surprisingly, they've downgraded. They see problems. And they were down, 2.5% in sales, and the stock at one point was down 5% during the day. Tesla had its meeting today. And in looking at it, Elon Musk is making it even more and more of a car company. They're going to start advertising. It could be TV, it could be print, but they're going into the advertising now to sell the cars. So it is gone, and he realizes that the maturity point of this has gotten to the point where now he's got to advertise. He didn't have to do that before. He saved a fortune. He really didn't need showrooms before. You bought the car online. He's becoming more of an auto manufacturer. He did not, and I was very disappointed, announce upgrades for the current model line. Don't like it. The car's old. It's toothy. It's what it is. It's not a Volkswagen. It's toothy. Okay. Cybertruck should be out, he says, this year. So that's there. Another board member was voted in, one that the public wanted. That's a good sign. And we'll see what happens. His comments on the economy today were terrible. He thinks that we're in for a very rough economy over the next year. So be careful and buckle in. This man's been making good calls. When you look at ARK, it's into a stall. It had a nice bounce off the $35 level. It got up here, couldn't make it to the 40, and it's suddenly in some troubles here. Should the market get under this 37.47, you'll actually get a downtrend. You would then have lower highs, lower lows at that point in time. You're fighting the battle at the 100-day up to the 200, and if that gives ground, you probably ratchet down to the 36.87 level and hold that. Could these numbers be attacked right now? Well, I'm not seeing that on the chart at this point, but anything's possible given you are overbought. So overbought, get a close under 36.87. The only next number is 34.19 if it wanted to make a run for that part of the market. But first, you got to get down and do that. Schwab gave back a little bit, but it's had a heck of a nice rally here. This is a market that just came back from the 46 level, got itself up nicely into the 51 level, and suddenly you can go back to this 18-day average and grind there for a while. Why not? In the gasoline, if you're watching the futures, they've been rallying. Now, they're not rallying like mad. But this is not the time of year you want to be thinking the short side of the market. This is the time of the year, if you get buy signals, you're looking for that. Will the Memorial Day holiday make this pick up and run? I don't see it. I wish I did see it. But I think the gasoline, number one, has already been priced in for Memorial Day. You know, the service stations don't call the day before, bring me a truckload. They place their orders, they do it. But the replenishment is the key, and there's supposed to be a record amount of driving. That's good. This Memorial Day could have some legs to it in terms of demand. The most I see right now is somewhere between getting into these moving averages up to 59, maybe the 100-week average, 100-day average, and if then you got to pop 60, 80, but I'm not looking for a big move. In Tesla, should this market get underneath Monday's low, right here at 166.79, I think you'd turn into a downtrend. And then I'm looking back to the 155 level. So, again, more expense for Tesla. Advertising's not something they've ever done. And as they do that, they're probably going to have to do something on pricing, and that'll be part of the advertising, I'd assume. In XLF, you have a downtrend. The market acts strange here. It's sideways more than anything, momentum down, but there's no buy signal at this point in time in the market. You'd have to get over 32.24 to negate the downtrend. And even then, if you did that, you'd have to get a close over 32.39 to get bullish. And at that point, you open the door up to get there, but nowhere near it at this point. In the industrial sector, I remain in the bear camp. You have lower highs, lower lows. You are getting oversold. I would love to see the market finish off by getting 97.20 to 97.14, the lower bands, oversold, and then I could say, hey, the pros are going to cover their shorts. In SOX, this was a trade I was wrong on when it cleared right through here. And then I was looking, could it get to the Bollinger Band? It exactly did that. And now it's into key resistance. But the semiconductors, AI, it is a crowded trade that everybody wants in, be it NVIDIA. They're suddenly buying stocks again. I don't know if you saw the hearings today about AI that was taking place at the Senate, and they were interesting. As was it Blumenthal? He brings up the conversation. He's playing it for everybody. I swear it sounds just like him. He didn't write it. He didn't speak it. AI did. And then they brought on the heads of IBM and the like, and these men are right in saying it. There have to be controls. This thing in the wrong hands is crazy. Now, what is this thing? What is AI? I was asking my IT person, Lewis, today. I said, what is it? And what it really is faster chips and faster computing speed. That's it. You're able to get into the databases quicker. You're able to write the algorithms and they can act in ways that we didn't do before because of speed. And that's why people love the chip makers right now, because the speed that they can do is absolutely part of this. You don't think algorithms have been around? They've been around. You don't think Google and Facebook and other companies have been using all these algorithms and a form of AI for years? They have. It's the speed that has suddenly become available and the chips. I hope that explains it to you, because that's what I understand it now to be. And I wanted to know. In XHB, the home builders, you're back down to support. There aren't a lot of homes for sale. Now, mortgage rates are going up again, so this is going to hurt it, because with the debt ceiling doing what it is, rates of all types are going higher. It's going to happen here. It's going to hurt the auto business. Unless the auto manufacturer wants to eat it, the rates are going up all the way through. And every time this happens, you put a real restraint on the economy. I mean, if you think of your bills right now and the rates go up, are you paying another $200 a month? Whatever it is to the average American out there, it's money and it's a tax, and it takes money out of the economy. On the energy sector, still embedded, bearish, could easily be going down to 75, 55. Pay attention, though, when looking at this, to the fires raging in Alberta, Canada. How many of them are? What's happening to the oil production there? Crucial that you do it. In my full research report tonight, I cover it in detail to give everybody an idea as to the importance of this. In GLD, you're in a downtrend now. The headwind of higher interest rates, a strong dollar, not the friend of gold temporarily. So let it come back. Eventually, what will happen is this debt ceiling will come to pass, and we'll go back to where we were, worrying if the Fed is going to pause. And if they're going to pause and inflation is sticky-ish, this all becomes a bid again. But the debt ceiling is too much for it to bite on right now. Same in the silver market, same in the copper market, and more so in copper, because China, the world's biggest consumer, is what? Slowing down in everything. Their anticipated growth in the quarter, I think, was 11%. They got half of that, not even half. And they're seeing this big slowdown. They're saying, no, we don't have to goose the economy yet. Like the Russians, they don't tell the truth either. They will be goosing their economy shortly. They will be lowering rates. They have to do something to spur on the demand, and they will. That's when this will come alive, not till then. BND, obviously, you heard me just say rates of all types are going up. Well, this isn't going to stay up in that environment, and that's what you're fighting. If you get no extension and no play in this, you're down here before you know what's going on. If interest rates, if the debt ceiling doesn't get resolution of some type in the next 2 weeks, I still think it'll be an extension, but that's me. And in the dollar, you're fighting big resistance. I would never tell clients to buy over a Bollinger Band. You only stay over at 5% of the time, and I know you're going to tell me this is that exception. That's what I hear all the time. No, it isn't. I don't know what else to say to you, but no, it isn't. Last, in the FXE, you're riding the Bollinger Band down. You might even end up down here. So the dollar reigns supreme until we make good headway on the debt ceiling, and then people will breathe with a sigh of relief. Now, tonight, in my full research report, what I wrote for my subscribers, I go back to 2011, which is a year similar to what's happening right now, taking you to the brink of going over the cliff. And I show what happens in it with graphs leading up to the drop dead date. They didn't go over the cliff. And then I show the next month what happened in the market on a week-by-week basis. It isn't what you think. Are we going to see history repeat itself? Okay. We cover all these markets, and we talk all these things you hear me talking about at our firm. We're talking lots of reports all day long. Graphs, trade ideas. And why are they important to you if they're in futures? Well, what do you think you're trading when you're trading SPY, DIA, IWM, XLE, XLF? I can go on and on. You're trading, the basis is really what's going on in these markets. And many of them, they don't have shares under them. They're trading basically the futures to get you this in a derivative sense. So how do you get our research? We want to give it to you for 2 weeks. No credit cards. You don't buy it. If you're a subscriber to my paid research, it's included. If you have a trading account with us, it's included. And if not, we want to show it to you to see what you're missing. IraEpstein.com, free offers. Move your cursor up here. You'll see an icon. Give it a click, free offers, and you can always call us. I'm Ira Epstein. You have a great day. I will see you all tomorrow.